Hello, everybody, and welcome to the Plus3 Futures and Commodities show. My name is Ben Maldonado, and we are recording here on Saturday afternoon, the 23rd of April. As always, I'm here with my partner, Barrie Hederachi. How are you, Barrie?
Doing pretty well.
You had a very good week. So did I. It was a week we've been waiting for a while. And if you're new to the show, make sure you go back and listen to a couple previous episodes because every week we sort of put a new chapter in the book and a new sort of act in the play. And this week we're going to add on to what we were talking about the previous week. So as always, we start off with Bitcoin, which is our proxy for risk. And surprisingly, with all the volatility we saw in risk, it didn't get hit that hard, although, and we were talking before the show about this, it did exactly what you'd want to see, which is we, got under the full square here in this, 43,000 area, 42,300 area, pulled back into it, couldn't get over it and failed. So to me, the weight of evidence is down. That's a failure at a critical spot. I expect follow through to the downside this week. We'll see though. What else do you have to add on Bitcoin?
Yeah, I think that's pretty much the case, as long as that upper square holds.
Yeah. And by the way, all the levels that we talk about on the charts and all the different asset classes, they are on a Google Doc spreadsheet that we share with everybody, and we'll post the link to when we post this week's video, so you can go in and see all the levels if you don't get them. Again, as long as we're below this 42.3 in Bitcoin, the weight of evidence is to the downside, and I think we got to look at testing this half square next, which is in about 33.4, 33.5 area,
if not more, if not
further. More. Yeah,
and not to forget how the high came in at your cycle. End of that 69-day cycle. So it's all kind of in place.
Yes.
And the thing is, we don't know if the next one is going to be another 69 or 140-day cycle. So
exactly. I have the 140 just because I was expecting to see an alternating one after that other one, but we'll see. I mean, it could end up being 69. It could be a bigger one, but we know we're down cycle wise, at least into probably middle of June here, in that area. Anyway, let's kick it over. We got a lot to cover in the Big Five because there was a lot of activity in the Big Five this week. So let me kick it over to you, and then let's see what the charts are saying. There it is.
Beaten up chart.
Man, those levels have been good.
Levels of they work well. So, like Ben said, if you guys haven't, if this is your first time, go back. It'll be worth your time to go back and check the last 1, 2, or 3 episodes, because we sort of walk it forward, and it's good to know where we're coming from, and you guys can get sort of in sync with the, psychology that we're using, and the approach.
Man, every week, Barrie, every week that timing looks better and better, doesn't it?
You mean the timing up here?
Yeah.
Yeah, that's locked in, buddy.
Yep. that's the 30, the 45, the 90. Yep.
Mm-hmm. Yeah. Okay, so last week we left with just basically one number. It was 44.50, and the idea was that if we can't really hold above it, we're probably going to go lower and test this 42.75 level. And that's why there are only two numbers here. And middle part of the beginning of the week went up into this zone here. This is the blue box is sort of a resistance box that we drew in, and that's the part that really needs to get cleared. Meaning, if we can break up, and like on Wednesday, we broke up and we closed, and the next day if we could have held above 44.50, I think then you would have to think twice about where things are going.
Mm-hmm.
But instead, what happened was we had a false break and a full-blown outside reversal, so that that sealed the fate for the rest of the week. And we came back down to visit 42.75 in a hurry.
Barry, can you talk a little bit about, just real quickly, because I think this is important, how you and I use false breaks to mark the end of a segment, like an end of a leg, like this one just right here is a perfect example.
Mm-hmm. Well, if it comes in with our levels intraday, then that helps. So we look for other evidence to be in place. And false break is sort of like the cherry on the top, right? That's like the final confirmation in real time. And you see that, and you see the price action around it in lower time frames. At least, speaking about the S&P here, we know that they end up putting in significant highs. Just like the high we had, the all-time high here, you can see how we had the first high, and then we came around and did a false break and a fast move right after that. Boom. And here's the first pullback, and then bam. And pretty much, the case here, right? So this false break, of course, was above the levels we were watching, not based on the actual pattern. Actual pattern. Anyway, false break, we watch intraday. They're really good because you can see the shorter time frame price action, and really you can participate with really minimal risk. Anyway, that's one way. I mean, there's so many ways to utilize it depending on your style. So now we came down to this area, 42.75, 42.70, 42.50, and 42.50. I would say, 42.50, 42.30. I'm trying to find one spot. There's a cluster of them here. Let's just say, let's go with 42.35. I'd say it's a good number. So that's not too far. It's right there. So the story here, the way I see this unfolding, 42.35. When I say 42.35, is really, it's a bit of a zone, right? So we can say between 42.30 and 42.40, give or take a little bit. Well, that area is really good support. And the reason it's a zone is that there's support from a number of different ways. And the idea is, if we don't bounce off of this on Monday, Tuesday, if we don't really turn on a dime on Friday's low or above or right around 42.35, I'm afraid we're probably going to go and check these lows down here. So that's the story. And when I say lows down there, we're talking around, at least 41.50. And depending on the amount of fear that we find here, we could easily just slip out of there and make new lows. I'm kind of thinking new lows here, just because, why bother with all this drama without making a new low, right? and it would take us down to finish up our 90. And if we can do that 90 by 90, I would be stunned. Interestingly, that 90 comes in right about, May 4th, which is, the FOMC news comes out on May 4th, right? That would be a hell of a thing if that happens. So we'll wait and see. For now, we're looking at 41.50 to be minimum target. If the Friday low gets taken out. So that's what I'm basically looking at. And to the upside, let's just say if we can settle above 42.75, then we can probably expect some kind of consolidation or go back and retest at 44.50. So that's sort of the bandwidth I'm looking at. And going to the weekly, well, and I think for the weeklies, you guys should go back and check so I don't have to repeat the same thing every week. We saw, and anyway, we were watching, we caught this low area, we found the solid support, we were looking for a pullback. We got a three bar counter trend, and then we turned around. So looking at the weekly, it just makes sense. We're going to come up and test this. And if we do test this, it's very likely we go make a new low. And if we don't do a false break on a weekly basis, then we're probably going to go lower. The 38.96 and these kind of numbers are not there for without a reason. So we have lower to go, and this box, actually the double box, which equates, is pretty equal to the COVID drop we had, brings us down to 35.70. So not to scare anybody, I'm just saying that's how the pattern lines up if we start losing these levels.
Yeah, I posted a chart on Friday with some weekly levels that I had, and it was 41.87, which is not far from your 41.50,
right?
40.22, and 38.53. So it's in the neighborhood.
Right. So we take it like one leg at a time, and even if we, I saw this ABCD sort of setting up here, and if you look at that, we're pretty close to it.
Mm-hmm.
Right, it's right there,
mm-hmm.
and that's right around 42.35.
Mm-hmm.
So you see, there's a bunch of stuff right there, including this equal move. So I don't think if you got short up here, okay, fine. You can sort of peel them off as we go down, but right in here it could get a little messy. So watch this area. 42.35 to either give out. If it gives out, it's going to be a quick trip to 41.50. And if that gives out, we're back to 90 in no time.
Yeah,
that's like what we saw last couple of days.
Right. If that ABC gives it up, then there's a lot more to go.
Right. And we're talking, 4,100 being the square would finish about 40.80. So say 40.75 is the 90-degree square.
Mm-hmm.
And I'm thinking it would make sense to get there. And if we get there, I'm thinking, well, depending on the pattern that drives it into that, it would be very easy to go lower. But we also have a Gartley in here, so we'll see how that plays out. I'll set up a Gartley for this and share it next time.
Mm-hmm.
And speaking of Gartleys, we've been following this
4-hour miracle chart.
The 4-hour lotto machine,
right?
So I've been posting this on Twitter every couple of days, and I think last week we left it off. I forgot where it was exactly, but when we got into that false break area that Ben talked about and I talked about earlier, that's where it came in, and you can see where our resistance line was, and we just broke above and reversed. So as soon as that became an outside reversal, meaning that the outside bar, the bar prior to that, you see the low of that getting taken out, that's basically a trigger.
Mm-hmm.
And boom, we dropped from there, and then here's that was right on support line, and then we dropped again, basically max reach of this using these equilibrium line. This is overrun, and we're just right there. So it's either we stop here, try to retrace back and somehow find some traction here and try to make our way back, or we're going to come up here and fail. So, and if we fail, we're going to fail probably in a big way.
Mm-hmm.
So let's watch how that plays out. And long as we're below these key levels that we talked about, I think long as we're below 42.75, I think the downdrafts are in place. And if we can key off of a good level, either Friday low or around 42.35, and start making higher lows and showing some positive action, then I think a test of 44.50 will be the next thing. So we'll see how it plays out. And so the numbers we're watching, 42.75 to the upside to sort of clear it and settle above that, or 42.35. So it's a very narrow sort of a band we're watching to see how the market structure sets up around that.
Yeah, however it plays out, Barry, I think it's important that now's not the time to be a hero, right? You need to have good levels to trade against and good discipline with when to get out and when to try and get in. As you stated, trying to short the hole is not a great idea. It's a recipe to get squeezed, actually.
Well, there are places to sell that's against resistance, at least if you're doing corners. So that, up here was one area, up here was another area.
Mhm.
So now we're we're moving. So now we're looking for some kind of counter trend intraday to see how it sets up. And for that, we use a 4 hour and that chart we just looked at just a minute ago. But these are close enough to sort of figure out where the balance will shift in the first couple, 3 days. But therefore, I'm seeing the middle of all that, we'll have to wait and see how it plays out. So it's possible we get into some kind of chop around this zone here.
Right.
You get that?
Yep. Sure.
Mm-hmm. So, all right, let's move on to bonds.
Another interesting juncture.
Yeah. Well, here we are on the bonds. Was looking for, had this box drawn out, 138 to 140 was sort of the zone we were talking about before this or last week. And, we sold off and pretty much found some support in the zone. And it looks to me like I would like to see this 216, come down 3 squares and be done with this. So, and we have an ABCD coming in around 136. So I'm looking for it to go back and test last week's low and at least complete this around 137.15, 137.5 or so. All right. Unless the trend line gets taken out. So until then, I think my focus is down at least till this sort of target is met.
Yeah, and our 40-year trend line lies right around this month, because it's on a monthly, is right around 134 and 27, so just under 135. So it's in that area. Right.
Okay. Well, here's the weekly. And we talked about this 1/3 line last week. And that's part of that zone, that the box that we have drawn out. That's around 138.5 or so.
Mm-hmm.
And 141.03, 141 was the quarter line. And so we're stuck right in there. So it's possible that we sort of, consolidate in here before running straight up. And if we really can't clear 141, I think we're probably going to go lower and finish up this half square.
Mm-hmm.
All right. You have anything to add to that, Ben?
Just that 40-year trend line's in that whole neighborhood around 135. So
yeah, so it's right around this. Yeah.
Mm-hmm. Yeah. So it's a really, really critical spot.
Right. All right. Let's move on to crude.
Winding up,
boy. And it's going to be a big one, just from the look of it.
Mm-hmm.
Last week, we were looking at the half square being resistance, 107 and a half or so. And we said, if we can hold above 102, it's in really firm ground and probably be able to get some traction and rally, and taking off, clearing the half would sort of confirm the next leg. And we really couldn't clear the half. We, messed around up there a little bit, sold off. And, 102 area was kind of, we went back and forth and then tried to be sold off. So the key level now is, we know this has been sort of consolidating. So we're just trying to figure out the early signs of the next leg or the new direction.
Mm-hmm.
So for next week, night, we come back down to 97. This is our key critical support area. If we can hold that, I think we're in pretty firm grounds. And we, if we can hold there, we can expect, back a test back at 102 and back on up. If we fail 97, then I think we have and we even get back into the box, I think we have a little bit of a longer correction or consolidation before we choose a direction again. So just watch that. The 2 key levels to watch is 97 for support and 102.5 to be sort of a balance point. Does that make sense, Ben?
Yeah, and one of the things that we've talked about on numerous shows is, the early signs are, can we make higher lows or higher highs? And so I'm watching this pullback to see if we make a higher low than we did in early April, that'll be the first sign of sort of, maybe a bullish move coming.
Right.
So let's watch this pullback and see what we get.
Right. So 97 is a bottom level to watch there.
Mm-hmm.
The weekly,
Still in a firm position, isn't it?
yeah, weekly looks good. Long term is fine. So this 95, 96, 97. So this is, square 90. This is 90 up from the COVID lows. The basic idea here is that, long as we can hold above that basis weekly, then, it's in a strong, it's basically building up value at a new level, which is around $100. And if that basically holds, then, we have an entire square up here to fill out. And if we do that, 140 would be the next target. So basis a weekly, and we'll just leave it at that. And if 97 goes, 90, 95, 97 level goes, then we get under the square, and that would mean much longer consolidation than we've had. So we're watching it carefully. It's in a correction, so we'll watch it. Mm-hmm. But the market is very bullish. The overall pattern is very bullish, mainly because it's holding above the square.
Agreed. Long term, really bullish on crude.
Yes. Next, we take a look at our friend gold, and
continues to frustrate everybody.
Well, it's gold. That's how it goes.
Yep.
It's like, well, we're still holding about this 1915. We got this box drawn between 1915 and 1940. And long as we're kind of above that or in that zone, it's on firm grounds, and it has enough momentum to drive higher. So next week, I'm basically watching to see how if we can handle this 1915. And if we can settle above 1940. So sort of a turn in here would, set up for another leg potentially. Mm-hmm. And if 1915 fails, we kind of get back into the same story as crude oil, and we'll probably consolidate for longer versus, like up here, it's sort of on a trigger, it could run easily. But if we break 1915, then it's going to be, it's a sticky situation. It's still bullish, and long term it's okay, but it's going to be a little bit stickier. Mm-hmm. So 1915 is a key level to watch for some kind of a bouncer.
And the weekly and the monthly on gold are still really bullish.
Right, exactly. Well, speaking of the weekly, here we go.
There it is.
So basis weekly, we have this 1919 and 1881 being sort of the support box, and you can see we've held above it. It'll come down for a test, but it always gets bought up. From a while back, we had two targets here for this run. One was 2100, the other one was 2000. So we pegged the 2000 last week, but then we sold off. So 1919 basis weekly is sort of the first support level. 1881 is sort of the bottom end of that zone. So we're holding, well above it. It's technically it's fine. Just a matter of letting time run out so we can get on with the show. Right, Ben?
Absolutely. I think gold looks bullish. It's just futzing around some more.
Yep. And then we have the dollar. Guess what? We hit the target.
101. There it is.
And then some. So I think this is, we're pretty much there. We have, if you go up 1/8 on the same square, we get 102. It's really around 101.80, 101.9. So you round it up to 102, let's say. I would say, if we're going to go higher, if this dollar is really going to blow out, then we're going to have to consolidate between, like 100.5 and 102. That will be the consolidation box. And if we can consolidate here for long enough, that would set up a whole nother level, and we could probably run up higher. So the key to watch next week to see if we can, well, not just next week, key from here on is to see if we're going to consolidate here, which would be very bullish, or if we're going to get under this 100.5 which is 90 degrees up, and start, getting weaker and consolidating under it. So for now, it's very bullish. We reached the sort of the 90 degree and a little bit of change. First target was 101. And now that we're there, being long the dollar, you have to be a little bit cautious. We have 102 to be sort of the extension of this leg. If we can, if we really push it, we get to 102. I can't really see going beyond this without a little bit of a correction, at least in time. So that's why I drew out the box. We'll see how it does it. If we do it above, 100.5, or if we're going to do it below. So the difference is if it's above, it's bullish. If it's below, then it's more bearish.
Yeah, potential. Because as long as we're sitting on top of that 90, it's really bullish.
Yeah, that's the thing, right?
Mm-hmm. If we get stuck below, we've got to be wary of that. That could be the corner.
Yeah, if we get stuck below, then it could be a corner.
Mm-hmm.
And so we'll look a little bit deeper into that. I was thinking maybe every week we spend a little bit more time on one market. At least I should.
Mm-hmm.
That way there's a rotation, right? At least every month we cover pretty much all of them.
Mm-hmm.
We look at, and then we look at timing a little bit closer. And anyway, for now, that's the story with the dollar. I think it's clear enough.
Mm-hmm.
Next, we go on to the euro, trading right off the textbook.
Wow, look at that check back failure.
Yeah, and actually we talked about this last week, saying, hey, listen, the next move we'd like to see is to have, if this area has support, to go back and test this. And if it fails, we're probably going to go lower. So there we go. We failed. And well below 108 now. So I think we have lower to go. And with the dollar at 10, if we get to 102, we're probably going to, there's a good chance the euro gets down into the half square, which is around 105.
Mm-hmm.
So that plays there. As long as the euro is below the square, which is 109 and some change, it's very weak.
In a weak position for sure.
Weak position. It's just weak all around, and any kind of a downdraft can just catch it and take it down to the half, which is 105. Well, let's say 106. Yeah, 105, 106, that area. And looking at the weekly chart.
There's the weekly dollar.
We didn't look at the dollar weekly. So
let's take a quick look.
Pretty much, it's funny how this trend line that's been there for a while is right around 101. Like, who knew that was going to come and tap it at that point? But again, not much to add other than to watch the levels to see if we're going to settle above or below. That's really the next part of this. And I think you have to be cautious in being long the dollar till we figure out how it settles. And it might be next week that's going to tell us that. So to put it another way, we could be coming into sort of a change in trend window here next week. So we got to watch that.
Yep, critical spot.
And going back to the euro.
There's the
weekly. And
looks like it's got a date with the 90.
Exactly. So 107 would be the fork. I don't think we even need the fork. I think it's time to. Well, no, fork was right there. If you fix it,
yeah.
We hit the low. So it's really, if that goes, we're going to 90. So that's that 105.5 sort of area, and that would set you up at a potential false break off of the low in March of 2020.
Right.
So we can watch that against the dollar, see how the dollar does again around 102, and we'll have to figure it out. But for now, this is bearish, but both currencies are sort of coming into support or resistance levels, and you have to watch your positions if you're long or short.
And if you look at the macro environment, as panic ensues in risk markets, the dollar gets money goes into the dollar. So it makes a lot of sense what's happening. Right.
And but here we have to pause a bit just because of the square, how we're measuring these.
Yeah,
Once that settles, next Friday we'll know which way it's settling, and then we'll take on the other leg, next leg that's coming up.
exactly.
Yeah. Well, that's all I got for now.
Excellent, excellent.
Thanks.
It's great, and really, and I'll show an example of it here. It's great to see, even in the volatility we're seeing, and the dumping of risk, how the squares sort of give you a perspective that it gives you a way to anchor things, a way to look at the market and not react emotionally, but say, okay, look, we're at a square. Are we going to stay on top? If we are, it'll keep running. Is it going to get stuck under? Okay, then we're going to reverse. And it's so helpful when things get really emotional, like we're starting to see.
Well, yeah, I mean, it's a lifesaver. I mean, look at this. Either squares, or you're looking at this. How are you going to trade with that? Like a bear scream. I know some people can.
Right. It's tough.
But I prefer not to if you have better tools. So like if you put a square on this, at least you know how to frame this thing. And that goes a long way.
Especially in times like we're in now.
Yes. I think that we talked about this last week, and that being, when times get a little, let's just say, uncertain, you want to lean on technicals. And that's really the only way to do it. Mm-hmm. There's no other way. So,
because if you rely on the news, you're just going to get whipsawed to death. That's a nice Gartley.
Yeah, so that's the Gartley. So it's funny how that box is setting up right around the old lows.
Mm-hmm.
And so we got to watch that, see how that lines up. But it's right in there.
Mm-hmm.
All right, let me put it back to you, and
let's take a look at commodity land.
Yep.
Before we jump into the NQs, which I'll review, the main theme, and Barrie, I do my review Friday night, Saturday morning, and then Barrie and I talk, and then we record. And when I was talking to him, I said, there's not a lot to talk about in commodities. He goes, interesting. He goes, I was wondering about that. And the reason being, and I was telling him, is that the message I got from the charts this week was liquidation, selling, not bearishness, like not sort of setups where we can, short the markets and the commodities, but just selling, people getting out, raising cash. And that kind of fits with, again, looking at the macro picture, what we saw, Thursday and Friday of last week, where people were dumping stuff, raising cash, risk, sort of de-risking. And it came through in the commodity charts as well. We'll go over a few of them where there's no immediate setup, but it's something I want to show you and something you want to sort of watch for potential setups coming. But that was the main theme, was that there was selling, there was cash raising, and there was de-risking in the commodity complex as well. Let's start with the NQs. This has been leading risk lower, certainly been leading the S&P and the ES lower, and led on the way up, and now it's leading on the way down. A couple of weeks ago, when we were in the midst of this, sort of face-ripping rally that was, crushing the bears and the late shorts, I noticed, number one, we stopped here. We stopped right at the square, which is, the spot where you'd expect it to meet resistance. And I said, hey, the best setup would be is if we came down and then pulled back right into the square and failed.
Mm-hmm. And lower high.
Got a lower high into a square and a 1x2 trend line. It was perfect, right? And look at what's happened since then. So this was a really nice setup in the NQs. And as you can see, we couldn't even hold above the half square here on the close on Friday, which is like call it 13,400 area. And as long as we're below that, here's the magnet, right? The full square is the magnet, which is down at about 12.7. And these are the March lows. So minimally this week, I think we test here. I think we're probably going to come down and hit here. And if we get down here, given the momentum we're seeing and the pattern, there's a good chance that we're going to bust through this square too. So this is set up in a very bearish manner. We know the levels to watch. We watch the half square here. As long as we're below that, we watch this full square. If we get stuck below that, then it's, keep ratcheting down. Again, all these levels are on the spreadsheet that we'll put a link to, so you can know what levels are important and where to watch. Even if we bounce, we bounce up into here into the full square, it's still bearish. So the chart on the NQs is, to me, is negative, and weight of the evidence here is to the downside. Any other comments you have or disagreements on this one, Barrie?
Well, I think stay the course.
Yeah.
And watch those full square lines and half squares for, clues when balance shifts.
Yeah. But right now the balance is definitely to the downside. We battled it out here at this full square for over a week, and decisively on Thursday and Friday we chose the direction. So for now we're down. Let's go to this beast. I want to show nat gas for a couple reasons. We got involved again in nat gas in this area when we held the half square, had this massive move higher. But again, here's an example, and I wanted to show this for a particular reason. Why you use the squares and why they help you sort of frame the price action and help you in knowing what spots you get a good decision you can make. Look where the high came in. Perfectly on a half square. And again, without these, it's tough to make a decision up here. Here, you can make a decision and say, I need to take some partials. I maybe let some go, especially when it pulls back off of that. But the bottom line is nat gas could be, it's in a pullback. There's nothing to do right now. But notice where the low came in on Friday. Perfectly on top of the September high. That's bullish. If we can hold on top of that, bounce, maybe up, back and forth between this half square, come up here and, chop around for a while, it'll sort of set us up for the next bullish move, which the weekly and the monthly support. Right now on the daily, there's nothing to do. And, there is a danger if we come up, make a lower high here, or some sort of false break and pull back sharply, that we could see a bigger pullback. But we're not there yet, and the weekly and the monthly are still very positive. But I wanted to show this for a couple reasons. One, how the half square caught the high, and two, how the pullback, if we can hold this area and even add another eighth into the full square, is very bullish. For continued moves higher over time. So we have to watch, see how this pattern develops. There's nothing to do now. Just waiting to see, how this correction off of that spike unfolds. Anything else to add on natural gas here, Barrie?
No, I think you covered pretty good coverage. I think that, that full square is really the one to watch here. And it looks like it's going to consolidate above that, but we'll see.
If it does consolidate above, it's very bullish.
Yes.
Next one we want to look at, sugar. Sugar we highlighted as bullish when we held this full square about a month or so ago. Then we came up and we held the half square, but look where we failed. Failed at the top, failed at the full square, and now we're pulling back. The reason I have this one on the radar and I want everyone to watch it is, we've got these higher lows coming in the pattern, and I want to see where this next thrust down goes. I mean, as long as we stay above the full square, it's going to be bullish. But if we can make another higher low, higher than this low here in late March, and certainly higher than this low in middle of March or early March, sugar could be sending up that sort of, rotating higher, rolling higher lows pattern, which generally precedes a fast move higher. So watching sugar, clearly the breakout is if we can, get above this full square and settle on top, that's going to be your all clear for much higher prices. Just wanted to point this out and show, what is a developing pattern, and we'll see how it shapes up, where this low and reversal can come in if it does. Anything else you have to add on sugar?
No, I think that's good coverage. And also, if we reverse, that half square is really the marker to watch. Once we settle above that on a reversal, then I think we're ready for the next leg.
Yeah, and that's at around 1950 area.
Mm-hmm.
So that is a key spot to watch.
Also, when that high gets taken out, it's going to be rather, epic, because look how many times we've tried. That's the fourth try.
And over a 6, 7, 8 month period.
Yeah. It's really building up. So
yeah, we challenged
it. You got to watch it.
We were challenging it in August, and now we're, still looking at this level. So it's a powder keg that's ready. We just got to see when the match gets thrown. The last one I got to cover is coffee. Coffee's been in a very bullish pattern. From if you go back and look at the monthly charts, almost all these commodity charts are very, very bullish. And we have an interesting pattern that's developed here over the last month or so. We had the low come in, stopped where it had to, which was at the full square, because this is really important support. You can see from these highs over here back in 2021. Thrust up, higher low, thrust up, higher high. Now we have another higher low came in on Thursday, and we got even in a crappy day where almost everything was liquidated on Friday. Mm-hmm. This thing still pushed higher, made a higher high. So coffee is getting that higher low, higher high pattern, coming off of support that we like to see prior to a fast move. Clearly, this half square is a critical spot. Call it the 231 area. If we can get above 231, settle on top of it, coffee looks like it could be ready to take out these highs and move higher. I like this pattern. We've seen it before. Here's an example of it, right? A low on the full square, higher low, another higher low, and then boom, you get the move. So hopefully this is a fractal for this, and we have this coming. Price will tell us. Mm-hmm. First thing we need to see is settle above this 231 area.
Exactly.
Get that, and we're in business. And that's really it in commodity land, because, as I said, it just appears that there was a concerted effort to raise cash, and they sold the grains, they sold the metals, they sold the other softs, including sugar, which we covered. They sold the energies. So going to be watching for the setups in those over the next coming weeks, giving you kind of a preview of a few that look interesting, sugar and coffee. And we have to see how the pattern plays out. We know it's risk off. We know in times of panic, they sell everything because they need to raise cash. So we got to keep that in mind, that's possible if we get some sort of panic in the equity markets. Don't be surprised if they're dumping their commodities too. But we're in a very exciting time. This is where you can make your year. If you follow your discipline, follow the spots where you have a good risk reward ratio, and be ready to pull the trigger when you see the setups. Is there anything in particular you're watching this week, Barrie?
More Ben, I think it's pretty much everything. Seriously.
Yeah.
There are times when you have to watch everything, and this is one of them.
Yeah.
Some maybe not so much, like gold, you're keeping an eye on it. Some of the commodities correcting, keeping an eye on it. But I think crude, bonds, S&P, definitely have to be on top of that. And also to watch the currencies to see, if the dollar's hitting some kind of support, or if we're just slicing right through these squares.
Right. And one of the key things that we always remind each other of is hey, when sentiment gets too strong in one way, be careful. Don't get caught up in that. So you got to watch for that coming up. We're not there yet by any means, but when your plumber working on your sink tells you, hey, he wants to short something, be careful. Right. And it's funny because a week ago there was a guy in here working on some drywall and painting in the house, and he saw my screens and everything, and he goes, hey, I just got into the market and I bought some Dogecoin the other day, and I was like, oh man. I said, don't. I said, take your money out of that, get it out of there. But it gives you an idea of where the sentiment was, and this was a week ago,
right?
So it's just a sign that there's a lot of excess that has to be wrung out of these markets. Barrie loves to say the S&P always goes further than you think, right? They push it a little more than you think is possible just to shake people out. And in a time like this, you got to be aware of that and wary of getting caught up in the whatever the popular sentiment is. So be careful, watch your levels. There's a lot of opportunity, but there's also a lot of risk. You gotta really be disciplined when you're jumping in and out in this kind of volatility. Anything else to add, Barrie?
No, I think that's a good coverage. We looked at the things that are really important and the levels, and I think we're good.
All right. Have a great week, everybody. We'll be active on Twitter, obviously, as updates warrant. And have a great week and best of luck. We'll talk soon. All right, Barrie?
All right. Good job, Ben. And you guys, if you like the stuff, please, click on like and share. And if you have anything to say, leave a comment.
Terrific. Thanks so much.
Have a great week.
All right. Bye-bye.